Top of the morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market preparation video for May 7th, 2018. Well, my goodness, we had just a beautiful relief rally on Friday. It was so nice to have that little break and see that tension kind of relieved here in the market. We had a tremendous move, and a big portion of that move was fueled by Warren Buffett's big purchase of Apple. Warren announced that he came out with a giant purchase of Apple, sending the stock to a new record high. And because Apple is heavily weighted in the NASDAQ, the S&P 500, and the Dow, those indexes all moved up sharply on that news, that follow through that we had that Thursday bounce. If we take a look at the Dow, we're more than 700 points up in just 2 days off of this low. Well, actually about 1.5 days, because we made that low, reversed it. So we're 700, let's see, I think it's about 730 some points. Yeah, about 730 points off of that Thursday low. That is a big move for basically a day and a half. Let's keep in mind that we are still below, however, we're still below the 50-day moving average. As a matter of fact, we are still below the 34 exponential moving average. So we've got a lot of work to do here. We are far from being out of the woods. And that was the title of my morning blog post. If you're interested in seeing that, just click the link in the description below and you can read my blog post this morning. So we've got some work yet to do. Now, it's wonderful, absolutely wonderful, that the techs bounced back so strongly. The NASDAQ breaking through the 50-day moving average, and we still have, notice right here, we still have this resistance high that we need to break through. And it looks like this morning, with the market gap up, at least at the moment that we're expecting, we could make an attack of that. Technically, we are still within this downtrend, so we need to follow through. Proof that we can hold the break of this downtrend. And what that means to me is any kind of a rest, consolidating move, or a pullback where buyers step in and prove that we're going to hold this downtrend line as support, then we finally have that proof that we could rally up out of here. So watch that closely. That's going to be extremely important. Keep in mind the diamonds and the SPY still have quite a bit of work to do to get up out of there, and you'll notice that the diamonds is not going to make it up that high this morning on the gap up, it looks like. Hopefully that 50-day moving average will draw it up there. But if we take a look again at the Dow, I just want you to recognize the challenge that's still ahead of us. If we were to go right from the close on Friday to the 50-day moving average, we've got about 230 points that we need to rally just to reach that 50-day moving average. We have more than 550 points that have to be covered before we break that last lower high in the market. So lots of work yet to do. As great as it is, we have to keep in mind that anytime we see such a big rally, that there may be profit takers come in. That would be pretty natural. Profit takers could come in and we could see a little bit of profit coming into the market. We could also see those bulls just really dig in and say, look, we're going to bust through these moving averages and we're going to move up in a big way. So that is also possible. Notice that the gap up this morning, SPY, will still be below that 50-day moving average. But we're going to get really, really close to challenging it, and that would be a wonderful thing to see. So lots of work yet to do. We're not out of the woods yet, but certainly a nice feeling of bullishness here. Now, let's also keep in mind that we have a lot in the news this week. First, we have about 1,400 companies reporting earnings. The economic calendar today is actually really light. There's really nothing on here to move the market around except, some Fed speakers, bond auctions, and things like that. But we have a lot in the political news. We have, negotiations on the Iranian nuclear deal. We have trade, jitters still going on. We have a North Korean summit apparently coming together, the talks on that. So there's still a lot of spin out there in the news cycle that could move this market around tremendously and even create big whipsaws. So we'll have to keep that in mind. So there's a lot yet to still digest. Let's take a look at the VIX. The VIX did a tremendous job on Friday. Really rallying significantly after after the big push up. We would expect this to really be lower, but toward the end of the day, this rallied back up. A little bit surprising, but we're still trapped in this area where we could flip either direction. Of course, I'm hoping that we see this VIX continue to fall. But the volatility fear index here is showing we kind of stayed firm right where we were, we're right where we have been for the last couple of weeks of trading. No real resolution to the fear in this market. Let's take a quick look at T21. 22, the 4-week new high, new low ratio. If we take a look at that, you can see we've rallied up significantly here. We still have plenty of room for more upside move, but just understand we start pushing up in here and we could easily see a little bit of profit taking come in. And that doesn't mean we have to sell off, but we could see a little bit of profit taking come in, and that would not be odd with such a big move in just a couple of days to see some profit takers. So let's keep an eye on that upside range as we move forward. So there's a lot going on here. There's a lot for us to kind of chew through. I mean, last week was a big week with the FOMC and employment situation number and the Apple earnings report. There was just a lot of information that we had to get through last week, and it's nice that we finally were able to power up and kind of break some of these just this bad taste in our mouth that we've had for so long. But let's also keep in mind that we're heading into the summer season, and the summer season is typically lighter volume, a lot more chop, a lot more back and forth. I would not be at all surprised. I don't want to predict this, but I would not be at all surprised that the indexes, after a nice rally, we could see a period of rest. We maybe get above the downtrend, do a lot of back and forth chopping around. So remember, this is not 2017. This is not the same market as 2017. So we can probably expect a little bit more back and forth, a little bit more challenging price action, a little bit more as far as whipsaws and reversal patterns and things that could come into play. And remember, we just have a tremendous amount of political news out there that could move us significantly. So I'm rooting for the bulls. I want the bulls to move up. I've got positions based on that. I want to see this market move higher. However, I'm not going to close my eyes to the fact that we could move down. And so I'm going to be prepared and have a plan for that in case this market does, in fact, reverse. So, and we could easily do that. Trade war fears pop up again, and all of a sudden, bang, the market moves lower. So have a plan for that. Be prepared and be ready because anything can happen in this market. Anything can happen. So with that, everyone, I want to wish you all a fantastic day. Let's get out there and root for those bulls. Let's get them, keep them inspired to push this higher. We'd really love to see some of these downtrends break to the upside. If you've never seen this information before and would like to receive it every day, please do me a favor. Click on the subscribe button on YouTube and the follow me button on Facebook. Click those thumbs up buttons and drop a note if you feel that the video is worth it. And also, please feel free to share this video with any friends and family that you might think could benefit from this information. Everyone, I want to wish you a fantastic day. I want to wish you great profits. And we will talk to you all bright and early tomorrow morning, Tuesday. Everyone, take care. Have a great day.